presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
Good afternoon, everybody. Happy Friday. Tom's out today filling in. He'll be back on Monday. And boy, a little bit of an continuation, I should say, of yesterday's action. We make it up to 51.23 this morning on the S&Ps. A little bit of volatility from there. You drop down to 5,095. Right now, we're positive by 7 points on the S&Ps. NASDAQ 100 actually slightly in the red by about 0.2%, off by 39 points. We're sitting above 18,000 right now. We'll jump right to some of the equities. Doesn't look like a lot on this chart, but man, that was quite a pullback. You're talking about almost 5%, man. $823 stock. You pull back $45 in the span of about an hour to $780. Just like that, you're back up $20. With the growth multiples that they are experiencing, you got a little bit of a reverberation trying to figure out where this thing should quite settle. But actually, pretty remarkable. Some of the A to B, C to Ds are actually completing at these price levels. NVIDIA just blew past it, which is remarkable. We're going to jump to some of these A to B, C to D formations right now. NVIDIA probably starts that A leg at about 100. 108 is the low there. You make it up to a B point in August of about 502. So just shy of $400 to be exact. What are you talking about there? 392 or something like that. You pull back to a low, okay, of 392. And so you're talking about a $400 A to B leg. You only got a 0.236 retracement on this equity. And boom, just like that, you make $800. We're sitting at 794. Now, what's interesting is that's NVIDIA, okay? You jump over to the S&Ps. Pretty similar action, which is remarkable on a percentage basis, but nonetheless, the run NVIDIA has had is obviously more substantial, but the A to B, C to Ds are both completing as we speak today. The S&Ps. I bring this up because at some point, folks, I mean, this is getting pretty remarkable that we've just had the S&Ps trade up 1,000 points in just under 4 weeks. 4 months, 4 months, not 4 weeks. 1,000 points, okay? You get an A to B leg that's about 3,600 up to 4,600. This one retraces to about a 50% retracement. You saw NVIDIA only did the 236, right? But nonetheless, your C to D, and what do? You blow past that B point, right? That was your huge gap from December 11th. Your C point was down here at about 41.22. You got to love it sometimes, folks. 41.22.25, and we traded a point and a quarter above that at 51.23. Listen, the way this market moves, who knows where we're going to be even in 51 minutes from right now at the closing bell in terms of the accelerations that sometimes we've had. But just taking a little bit of a breather would not be outlandish when you're dealing with this type of an acceleration. And it is cool how you get the S&Ps line up, right? You have NVIDIA. They just completed theirs. Now, the NASDAQ 100 could go a little bit higher if everything comes in terms of where that A to B, C to D leg. Your A to B leg in the NASDAQ 100, you're talking about from a price point of about 10,075 up to your B point there, which is 16,000. Yeah, so almost a 5,000 leg. And then you'd bump from an area of 14,140. So that brings you about 19.4. Your A to B leg, C to D. You pull back to a 382 here in the NASDAQ. So what do we have? NVIDIA pulls back to the 236. S&Ps pull back to the 50% retracement. NASDAQ only makes a 382 retracement. But if you're going to complete that A to B, C to D, the NASDAQ might have another leg in it, man. And you're talking about 1,400 points. Not outlandish for an index trading at 18,000. What is that? 7 to 8%, something like that, to the upside from here. The only problem is you got a little bit of a pullback today, so maybe it needs a little bit of a breather. You jump to some of the short-term time frames in terms of how we traded at the beginning of the day. a lot of selling up here to begin things. Can't fault anybody, in terms of the gains that are in there. 185 down to 182.50 for Apple shares. You're down by a full percent for Apple. Microsoft gives up, what, $7 on the open? $7 on the open. You jump over to Google shares. No real huge move, although they're dealing with their own animal, right, with Gemini. They really haven't experienced the updraft that many other companies have. Meta shares trade down $12 from where it was earlier this morning. Amazon gives up $1.50 from where it was, $174.12. Netflix backs off $10 from where we were earlier this morning. Some pretty dramatic pullbacks if you weren't benchmarking against yesterday's acceleration, of course. Okay, you're down by 1/3% in the NASDAQ, but you are now off about 160 points. You've given up almost 1% from the top here. Again, just be aware, folks, that this run of 1,000 points, in under 4 months, after we just had another 1,000-point run, okay, that began less than 2 years ago in March of 2023, you're going to need a little bit of digestion, I think, as we come into what's going to be, looks to be, the next revolution of AI technology, in terms of AI, blowing things apart, man. Pretty remarkable. Now, I jumped from there. Pretty interesting. This article's up there at the top today. Bezos and NVIDIA join OpenAI in funding humanoid robot startup. It's like the stuff that Terminator 2 is built on, right? They could have had that headline somewhere in there in cybernetics. Is that what it is, cybernetics? Figure AI also gets investments from Intel, Samsung, and Amazon. Listen to these companies, okay? The company's roughly valued at $2 billion. Do you know this company? I don't know this company. $2 billion company. They're raising almost $700 million. They're getting it from Bezos, NVIDIA, OpenAI, Intel, Samsung, Amazon. And they're coming, folks, okay? I try and imagine the world of what it's going to be like for my son Tommy when he's anywhere near my age in his early 40s. And you can't do it. I don't think you can really imagine right now the cusp of what we're on over the next 40 years, let alone the next 5 years, right? So this startup, raising about $700 million. That puts the valuation at $2 billion, and it's not going to be surprising, man, in terms of they're coming. Everything's coming. I tell you, I'm always joking with my dad in terms of, what's it going to be like, man? Tommy's going to have flying taxis, robots at home doing his laundry or whatever. It's going to be Jetsons in full effect, and NVIDIA is going to be the one that's going to be powering that, at least for right now, until somebody plays catch-up. But nonetheless, they're not there just yet. That's for sure. All right, let's jump over to that gold contract. We got some action today to the upside. Gold. You make a run from October up to 2152, and we've been chopping around at this area for some time now. Gold in between a range of about 2,000 and 2,100 since about November. You're right in the middle of that area, but gold catching a little bit of a bid as we get a little bit of a pullback in the dollar index from where we were about 10 days ago, right? Dollar index February 13th up at about 105. We're trading at 104. You jump over to that gold contract. Not a coincidence, right? You had gold at about 2,000. Now you're up to 2,050. You got to keep your eye on that dollar index. We'll talk a little bit about that dollar and yields when we get back, folks. We'll take a look at some equities. We'll talk a little bit of Fed speak as well when we get back. Stay tuned.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We got the S&Ps right now hanging on to single-digit gains. We're up by 5 points. Just jumping back to that article about talking, walking, squawking robots that some of the biggest companies in the world are investing in here. It's interesting how they break down and divvy things up. In terms of, you have Intel's venture arm, $25 million. Samsung at $5 million. You have venture firm Parkway, which is at 100. They're ramping things up. Align Ventures is at 90. ARK is in there at 2.5 million. A little taste for the ARK Venture Fund. Alaya Capital, 20 million. All right. Tamarack, 27 million. Boscolo, 15. Bold Capital's 2.5. You know, why would you go public, right? And you're seeing it happen here, as in why these companies stay private and they capitalize on these early stage gains. And you're piggybacking on the backs of some of the biggest companies out there. Now, OpenAI is putting in $5 million, okay? They had 1.5 million. I mean, that's nothing to that company, okay? Microsoft invested $10 billion in them. Remember, they're putting $5 million in to this company. They, at one point, considered acquiring this company Figure. Yeah, and now you're going to raise about $700 million. They were looking to raise $500 million, actually. And they talked about here that, yeah, they reported in January. This is the article in January, just last month. This is what I'm talking about, where why would you take it to the public, man? These companies, they were just going to raise $500 million, okay? Microsoft weighs leading round. They could raise $500 million. Nope, we're going to raise $675, just like that. So much for the $1.9 billion pre-money valuation, okay? No, we're going to go with a valuation that values us closer to $2 billion. That's $100 million. It's been a month. Anyway, markets are up pretty dramatically over the last month, to be fair, as well. All right, we jump around. Let's talk a little bit of Fed speak. Talked about this on my program this morning, but yeah, they're giving themselves a few months here, and it looks like that we at least got to go to June, potentially, in terms of them having enough information to be solidly confident. My dad likes to say they're, afraid, and I think he's right, but maybe they should be afraid, because they don't have the confidence in themselves to call it that inflation is going away. And we got a couple spooky numbers, and that's really going to cause them some pause. Fed Vice Chair Philip Jefferson, Governor Lisa Cook, optimistic inflation is cooling despite the blip in January, but made clear they want more evidence. It's headed back to 2%. At some point, as we gain greater confidence that disinflation is ongoing and sustainable, that changing outlook will warrant a change in policy. But yeah, excessive easing can lead to a stalling or reversal in progress in restoring price stability. Yeah, and then you jump to Waller. Pretty strong words here, man, as he literally puts a timetable on things. The strength of the economy and the recent data that we've received on inflation mean it is appropriate to be patient, careful, methodical, deliberative. Pick your favorite synonym. It's a good quote. Whatever word you pick, they all translate to one idea. One idea, what's the rush? All right? And yeah, you get into some of the numbers, and here we go. So I'm going to need to see a couple more months of inflation data to be sure that January was a fluke and that we are still on track to price stability. We haven't seen this type of clarity in terms of saying, I need months of data, right? My conjecture is that in the absence of major economic shock, delaying rate cuts by a few months should not have a substantial impact on the real economy in the near term. And we get to find out in real terms how that's going to play out over the next 6 or 12 months. You can jump over to the FedWatch tool, all right, the CME FedWatch tool. I've posted this in the Den before. You can just Google. I think you just Google CME FedWatch tool if you want. And don't follow this as like the holy grail to anything, okay, folks? Yeah, CME FedWatch tool. It'll pop up right on your, probably as the top item there within your Google. And you can go to each meeting. Okay, so like we go to the March meeting at the top here. You see we have some tabs. Okay, this is the March meeting, March 20th, 2024. And you see the odds that are priced in, okay, for probability basis based on the Fed funds target range and the probabilities. Well, there's about 100% chance, I'll give you that, 97.5% chance that they don't do anything at the current meeting. Okay, you go out to May, and as of right now, they're looking at about an 80% chance that there's no cut by May. Okay? You go out to June, and you're looking at there's still about a 1 out of 3 chance that you're staying where you are, that you're staying at 5.25 to 5.5%. There then becomes a 50% chance that by June we have cut once, and there's about a 12% chance, maybe 13% chance we've actually had 2 cuts by June. Now, the part I want to focus on is that they give you a backtrack of what this number looked like yesterday, a week ago, and a month ago. So just for a second, remember, we're at the June meeting right now, okay? This is the probabilities as of today, which are basically hinting to the fact that there's about a 1 out of 3 chance that they stay. There's about a 50% chance that they cut by June. And there's somewhat of an outlier that they actually have cut maybe twice by June, okay? Now, remembering that right now, for May, they're pricing in a 1 out of 5 almost chance that they cut. We get a lot of data by May or June. Okay, so I know 2 cuts seem surprising by June, but stay with me for one moment here because we go back to the June data and look how wildly different it is than where these numbers were just 1 month ago on January 23rd. So on January 23rd, the odds that they were going to stay where they are right now, that we would have 0 cuts, was about 0.5%. If you put that into odds, folks, that's a 1 in 200 probability that we have not even had any cuts yet. You now have a 1 out of 3. You went from a 1 out of 200 probability to a 1 out of 3 that we are going to be right where we are as of June, and that's in 30 days. Percentages on small numbers can be deceiving, I always say, but when you're dealing with those small percentages, and boy, 1 out of 200 was the probability, you're now sitting at a 1 out of 3. Yeah, and I mean, look at even the probability. They had a 1 out of 3 chance that we're going to get 3 cuts by then. 1 out of 3. That's dropped to a 1 out of 300. 30 days. So stay nimble. Keep your stops tight. We have volatility in both directions in this market right now. You saw it on the yesterday's action to the upside, you know, and even on the bearish side, man, we just had a rip to the downside of about 30 points in the S&Ps, okay? And you're talking about ranges here that where do we trade to? Traded right down to where we were pre-market, right? And where do we trade from? Right near that 51.22, which maybe it's just a coincidence, folks, but they do say there's no such thing as coincidences. And that is about as clear as it gets for a nice, simple A to B, C to D to the upside, man. When you're talking about an A to B, C to D, each leg is 1,000 points. You pulled right back to the 50%. You make that C point, and then the best part of it all, man, was how you plowed above that B point there on December 11th. We gap above it. You do it with strength. And we'll see if the volume can carry through. I mean, we got a lot of volume at some of these C points down here as well, but the volume's been pretty persistent right now, even if we might be in the need of a little bit of break, a breather, we'll call it, from the run that we've had. NASDAQ 100, you put it on a weekly. My goodness, man. We got one red bar outside of last week, right? Last week we had a red bar. We got a red bar in January. That's the only red bar since October 23rd. You're talking about 4 months, folks. Remarkable. All right. Okay, folks, stay with us. We're coming back. We got S&Ps up by 4. NASDAQ 100 negative by 65. Dow up by 95. And when we get back, we're going to be talking to our man Robert from Kansas City. We're going to be talking some Bitcoin, I think. BITO. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&Ps hanging on to those gains. We're up by 3 points right now, and we got Robert from Kansas City on the line. Robert, thanks so much for calling. Good afternoon.
Yes, hello. I was going to see if you could do an analysis or take a look at BITO, BITO.
I sure can.
I thought it was going to pull back and maybe do a retracement, but it's kind of going sideways. I guess I thought it was going to look bearish, and based on a daily chart, daily candle. And it's the way it's kind of going sideways. It's causing me to question that, and I wanted to just see if you could do your analysis on it.
Sure, I would love to, man. I appreciate the call. So are you looking maybe, are you bearish kind of Bitcoin? Are you looking for just a small near-term pullback after the run it's had up? How are you looking why are you looking for a pullback?
I guess I'm agnostic. I don't care if it goes up or goes down. Like Larry Pesavento, lose your opinion, not your capital. So
Right.
I just my instinct was, it's had quite a bit of run. It's probably
Sure.
going to do pretty good retracement here. I don't know what it'll
Sure.
do after that, but
Sure.
it's not
No.
really. It's just barely pulling back. And usually when you have a run and you barely pull back, that's not a great sign for shorting. I always think I would short it, but I'm questioning that now.
No, I appreciate you explaining it, man. I only asked just to understand. I think we're all thinking about Bitcoin. You should probably be thinking about it with the run that it's had, right? And yeah, it would make sense, man, that you could get a pullback. But boy, I kind of agree that the resilience has been pretty remarkable, right? The ETFs go live in about January 11th. I think you got that acceleration. You had a pullback to January 23rd. And maybe that was what that was there, Robert. That maybe that was actually the buy the rumor, sell the news. You had the pullback below 40,000 right after the ETFs got approved, and then you get this bounce. I mean, longer term, I think it's going higher. And I don't have any Bitcoin, so my convictions are not stronger, but I really think longer term, Bitcoin at 50,000 with what's going on in the industry. You got some of the bad players out there. You're at a point now where we're 3 years away from where Bitcoin was pushing highs above 60,000 in April of 2021, which is not outlandish to think maybe, enough has happened over a period of 3 years. You did get back to an all-time high of almost 70,000 in November. So I'd be careful trying to short it just because it seems like the next run is on. And that's just the feeling, just like you're getting. And that's just the feeling that I get, man, that this is another run. They're only making a certain amount of Bitcoin, and there's only one Bitcoin. And all those other crap coins out there, you got to be super careful. But I don't think Bitcoin's going away. I think that's going to be kind of the dollar of crypto in terms of, the base currency that you can always be trading in crypto to a certain degree. Now, here's what I will say about BITO, though. Are you aware that BITO, B-I-T-O, the one you're calling about, which is the Pro Shares, let me pull it up, right? Is that it? Bitcoin Strategy ETF. Yeah. So that trades off of futures, okay, which you do want to be aware of, versus the physical ETFs that just came about. And the reason why I stress that is because when I pulled up the holdings, right, I was curious what they have, and they basically have 50% of the March contracts in the futures and 50% of the April contracts in the futures. And so you do open yourself up to a little bit of risk there where you have to roll those contracts. We've seen some wacky things happen in commodity ETFs, right, where you have to roll those contracts. I think, was it the USO a couple of years back or one of them? And so you do have that risk in this ETF in particular, BITO, if you're looking to go. Now, that could help you both ways in terms of the contango of things and how it could impact things, but it could just be a weird moment, where the price kind of detaches from the underlying, versus they have the physical ETFs right now, which might just take that out because, it seems like as these things blow up, that when you're going to have to roll, and everybody knows you're going to have to roll, and you got the March and the April, that might create some problems as you go forward. I'm not sure, but it's something to consider when you look at some of these ETFs.
And when you're referring to the physical ETF, you're referring to IBIT?
I'm not too familiar which ones those are. I think Fidelity has one. I was trying to find a couple as I was doing it. Let me see what popped up here. I think Fidelity pumped one out. FBTC, potentially, a physical Bitcoin ETF. Maybe somebody else in the den can help me out, and I'll throw it out there for you, Robert, if they do.
Okay.
But if I was going to do that, and this, you want to look at the expense ratios as well, but I think they're pretty close. This one I was looking has about a 0.9%, I think. Some of the Bitcoin ones, they're like foregoing some of their fees early on just to try and build that, leader of the category type deal. So pay attention to that one as well. But I did, it was interesting that I pulled it up, and I was like, man, that's going to be interesting when they got a roll every month. They got 50% in the March, the April. And what if that provides a little bit of volatility, even if it's not the underlying Bitcoin in there? So I'm not sure, man. I mean, there's, the market is up tremendously. Bitcoin's not following that happening, so it's not quite correlated to the NASDAQ 100 how it is. And I think it's just on its own run right now and maybe just resting a bit. But yeah, not a lot of weakness in that market, right? When even all the optimism for the ETFs got it up to about 50,000, and you only got a 7-8 day pullback or something, and we're already above that price level, which is pretty resilient. Right. So, yeah.
Okay, well, thank you.
All right, hope that helps, man. I appreciate the call so much. Yeah, pretty interesting. Can't help but take a look at Bitcoin, man. When you trade from 25,000 up to 50,000, right? From September to 50. And yeah, on a longer term basis, it feels like this is making another real run, which is pretty remarkable. But remember that when the real runs have happened, folks, they've gone from 4,000 to 65 to 70,000, right? And all we did is just go from 15 to 50. I still think we're in the early phases there and taking out a couple of the bad actors. Excuse me. Yeah, and I hear what Robert's saying, man, because I've been looking for the opportunities as well, and that was maybe your opportunity, right? That was your opportunity, potentially, January 11th through January 23rd. I mean, it was a 20% pullback, okay? And then, boom, you take off like a rocket ship, man. You're up to 51,700. And they're only making so many Bitcoins, and it's going to be remarkable, because I find myself thinking, I say, hey, man, maybe I should get Tommy a piece of Bitcoin, right? Put it in some hard storage, right? Maybe I build it up and someday he's got a full Bitcoin or something like that. You find yourself thinking that. If enough people are thinking that way, man, there's not enough Bitcoins to go around. And the ETF access that's provided to the public now, yeah, it's going to provide pretty easy stuff going on. All right, we jump around to what else we've got going on. What else do we have pulled up here? Yeah, we got a stock split for Walmart. We jump back to Walmart real quick. So Walmart, you're trading at 175.80. This thing has been on quite a tear. They got about some pretty gangbuster earnings on them. And I've talked about it myself, man. I shop at Sam's around me in Lakeland, and the Sam's experience is incredible. Technology-wise, it's incredible. I was giving them a ton of grief early on in the pandemic, man. I had packages showed up at my, let me make sure, yeah, at my door, folks. I told the story. I had a Sam's package. We'll finish this up. Walmart's catching up, man, and the stock is reflecting it. And, yeah, they're catching up in a big way in terms of the technology, the deliveries for Amazon. But now all I do at Sam's, I only use my app. I pay for everything. I scan it myself. I don't even use a checkout. Think of that. No one's going to need checkouts anymore, man. You're going to be using apps at a maximum, if not just making sure all that stuff is paid for with your account somehow. Stay tuned, folks. We're coming back. S&P's up by 7. We're right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We jump around. We got Tesla shares down about 2.5% right now as they continue to trade with a little bit of volatility. Speaking of, you jump over to Warner Brothers Discovery, down about 10%. Man, they miss on the top and bottom line. They got a bunch of free cash flow. But part of the problem there, I was reading about this earlier because, I'm in love as a consumer with Max. In terms of great, even for the premium price that you're paying. I think the programming is one of the last ones. I'm like, come on, I got to cancel HBO. Don't make me cancel HBO. Along with what comes with it. But the stock's a different story, man. A different story dramatically, as in they got some problems. They got $44 billion in debt. They got free cash flow, but they don't give enough guidance on the free cash flow deal. And one of the aspects I was reading about today that was interesting is they got a ton of free cash flow, okay? But a part of that had to do with Hollywood was on strike. So what happened there is you had these companies saving money, not spending expenses, increasing their free cash flow, and all of that is going to come ratcheting back at them once they start putting into production everything that got delayed. And all that money that they saved is just going to be spent in the forward. So you should be careful, because reading that, when you're missing on revenue, you're missing on profit. Your story to investors is free cash flow. But the reason why you have that free cash flow is because your workers were on strike, so you couldn't spend anything. Yes, you want to be worried about that one, man. With Warner Brothers Discovery down about 10%. Is that an all-time low? I think, yeah, all-time low, man. $8.25. And as I mentioned, remember, the $78 is not real. That's the Bill Hwang saga, the run up to $78, the run down, the destruction. But nonetheless, $20 to $30 was real for an extended period of time. And, investors are not too cool with the free cash flow story that they have been spreading out there. You jump over to AT&T, clawing back some of the losses we had. For them yesterday with their outage, we're up by 1.3%, but if you think about it, they didn't experience in quite a heck of a run to the upside. They missed out on it, much like Google missed out on it yesterday as well. Google shares today basically flat. You see they were higher pre-market, but that story about their AI having problems, man, the negative reaction that they got, etc., not quite the day that they had probably hoped for, considering what else was going on in this market. All right, what else we got here? Is that the $2 trillion one? Yeah, NVIDIA's at $2 trillion. Now, I think they dropped that number, man. NVIDIA, they have a nice round number, folks. Talked about on this show tonight. I think they're just under $2.5 billion, to be exact. 2.5 billion shares outstanding. They were actually at 2.47 billion shares outstanding as of yesterday. So something happened on that earnings call, and you had 300 million shares get created. Would that be right? Yeah, I think so. No. 30 million shares get created. 30 million shares. It was at 2.47. 30 million shares get created. Nonetheless, you're at 2.5. The number that you got to get to be at 200 billion isn't even 800. So you're just under that number. Nonetheless, a historic day for NVIDIA shares. But you do get a little bit of a pullback today on everything, right? With Microsoft shares basically where we just opened yesterday at 410 down from 415. You look at NVIDIA, still well above where we opened yesterday. NVIDIA was flirting with only 740. Remember, 740. This thing traded from 750 at the open yesterday when we already knew all their numbers to 823 at the open today. Yeah, that was just exuberance, man. So be careful in this market. You jump over to Apple. They give up their gains. They're off by about $3.50 off the top there for Apple shares. All right, some other equities with movement. Carvana. Talked about this morning, man. Carvana shares. Look at that acceleration. 32.3% to the upside. They got profits in this company. You talk about quite a ride, man. From $3.76 down to $3. The company looked like they were going BK. And not more than, 14, 15 months later, you're up by 23 times that multiple for Carvana. You jump over to their market capitalization right now, you're talking about $8 billion. Just like that, man. They were on the ropes. It looks like they made it, as cars and vending machines are here to stay. We check out some of the other car companies right now. Ford, up about 0.3% right now. How about Rivian, right? There's your weekly, okay? But Rivian, it's not stopping, man, okay? There's your daily. You're down another 11% today. And yeah, be careful of this equity, okay? Because this equity is still valued at $10 billion, and I'm being kind. It's 9.4, okay? They have about 1 billion shares outstanding. What are they at right now? 933 million. So pretty simple math. About 1 billion shares outstanding. You're down another 11% today, and that's after trading down from $15.50. You're down, 35% from where you were on Wednesday, and you take a look at a longer-term chart, you're actually gapping away from this area that Rivian has been in. That low was at about $13, man, and you are plowing through that area right now, and they should plow through that area because they're going to make as many cars this year as they made last year. Where that company is, that's nowhere near what that company's supposed to be doing. You had double downgrades all over the place, which is why I think you're maybe not all over the place. I did see double downgrades somewhere. 11% down after yesterday's decline. And, I said I love Max. I've never test driven a Rivian. I love how they look from the outside, man. They seem like beautiful cars. They cost about $100,000 out there, and Rivian is still losing, $40,000 per car. They're losing a lot of money. And you have to pose the question of how much money can you really lose if you have a demand problem in this industry, man, and which you have right now, for sure. And I found myself looking at these vehicles, saying to myself, if I was ever going to splurge down the road for a huge SUV during the childhood years, I don't know, $100,000 for a car, that's a tough one to stomach across the board, folks. I know car prices are high, man. You start getting into the 3-row SUVs, they ratchet up for a certain degree. But at least I was like, man, this is an awesome car. Look how cool it looks, all this stuff. It's brand new. Now I'm saying to myself, why would you buy this car? It might not even be around a couple years, man. This company might not even be around, which is remarkable when you think they have 1 billion shares outstanding and they go to market for $100 billion. Pre-market, pre-revenue. I remember at the time joking on the air, because I watch Shark Tank occasionally. It's not real business. It's fascinating stuff. It is to a certain degree. It's great seeing some entrepreneurs out there, the products they create, some of the sales stories that they bring to them. The negotiations are always kind of just, anyway, reality TV at its finest, right? But I was saying, could you imagine somebody coming into any room of investors like that and saying, listen, I got this phenomenal idea, okay? I got Jeff Bezos. He's already a buyer in the future when I start making cars. And I'm looking for an investor in my business, and I'm selling, 10% of that business for $10 billion because I'm valuing it at $100 billion. And Mr. Wonderful says, what are your sales for the last year? He says, we haven't sold anything yet. He said, but it's a $100 billion company if you want in right now. And that's what they did. And they got it out to the market at $100 billion. And that's real life. And that's real money. And now that equity's trading under $10 billion. And that's probably being kind to this equity when they're late to the party and they have a demand problem and they can't ratchet up. You got to get to economies of scale in this business, man. And the fact that they're making 50,000 cars in 2023 and they're going to make 50,000 cars again in 2024, you can't make money on these vehicles if you can't ratchet up the number that you're producing. And there's no way that they should be stuck already at 50,000 vehicles in back-to-back years as they try and ratchet things up. Tough story, man, as this market plows higher. S&P's up by 10. We jump over to the VIX right now. VIX, 1379. Still a little elevated from where we've been prior, but you are pulling back to a 13 handle. We got 10 minutes left of trading, folks. One more segment. Don't go away. We'll be right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps looking to make yet another record close. We're up by about 9 points with 5 minutes left to go, trading at 5107. NASDAQ 100 slightly in the red right now, negative by 33 points, 18,009. You put things on a weekly. And what have we got for closes out there? Yeah, we're not going to get the close on the NASDAQ, as we got a close a couple weeks ago of 18,038. We're sitting 18,010. This is just the futures. Nonetheless, the Dow. Look at this, man. We're on the way to 40,000. Dow, less than 800 points away from 40,000. We're up by 0.25% on the Dow. Russell up by 0.25% as well. NASDAQ 100, actually the laggard out there. Bitcoin, down about $955, 51,760. Crude, down more than $2, bouncing off that $78 price point at 76.60. And gold, having a little bit of a day to the upside. You jump over to the dollar index. Back to a 15-minute time frame, bouncing off that low yesterday, 103.43, just chopping around today at about 103.95. All right, we check back in on Amazon shares. Look at a little volatility. Amazon going for the spike high of the day, man. Look at that as we come into the end of the week trading. Amazon shares up 0.25% right now. We check back in on NVIDIA shares, holding on to about $5 in gains. We jump to Microsoft shares. Down about 0.3. Walmart, they'll be splitting as of Monday, man. It'll be a 1 for 3. So this stock will be trading just under $60 on Monday. And yeah, they're going from they're going to have 8 billion shares outstanding, Walmart. Yeah, they're going from 2.7. So what is that? 2.7, 5.4. Yeah, 7 billion shares? No, 8 billion? 7 billion shares. Sorry, I'm losing my mind. 8 billion shares. Thank you. 8 billion shares they'll be having on Monday as Walmart splits 3 for 1, trying to appeal to the individual investor, I guess. All right, folks, thanks so much for tuning in. Quite a market. S&P's up by 8 as we close out the action. NASDAQ 100 slightly in the red. I'll be back for the 4 o'clock update. I'll see you Monday morning right here at 9 a.m. Have a great weekend. Have a safe weekend, folks. No drunk driving. Take that Uber. We'll see you back here Monday at 9 o'clock in the morning. Thanks so much, folks. Have a great one.